Hey everyone, and welcome back to another video for today. So SoFi hit $20 today. Actually, it went to $20.80 or so. And then Tanner thought it was a good idea to post some screenshots of the stock price. And well, since then the stock has come down. So we closed the day just under $20 at 19.95. Now, this also means that year to date, SoFi stock is now up 41%. Now, of course, as you know, I'm very bullish on SoFi, has been bullish on SoFi for a long time. And you might remember, but at the start of the year, SoFi was already at $18. And I've said it time and time again throughout this downturn, and even when we started to rebound, that SoFi today is, of course, a much better company than SoFi in January, right? SoFi in January, $18 is not the same as SoFi July, $19 or $20. Right? Because today, first of all, we've got more information about the company. Second of all, today we also know that the company is going to relaunch crypto. We also know that the company will launch international money transfers. And one of the main reasons why the stock is up today is, of course, this announcement right here. So let's discuss all of it, and let's also maybe keep our heads on our shoulders, okay? So let's discuss all of that in this video. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. Really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, just a quick FYI, SoFi near $20 means that the market cap, this of course needs to be updated a little bit, is going to be closer to $22 billion. Now, you might have missed this, and if you have, well, you've come to the right address. The S&P Dow Jones Indices announces update to S&P Composite 1,500 market cap guidelines. So, the previous market cap eligibility criteria were as follows: $20.5 billion or more for the S&P 500, $7.4 billion to $20.5 billion for the S&P Mid-Cap 400, and $1.1 to $7.4 billion for the S&P Small Cap 600. Then the updated one, for the S&P 500, you'll need to be at $22.7 billion or more. Okay, so SoFi is now closer to $22 billion. So not eligible for inclusion in the S&P 500. Then for the S&P Mid-Cap 400, they are. Okay, so that's between 8 to $22.7 billion. And of course, SoFi being closer to 22, even if we fall a little bit and we're back to 20 billion or 19 or whatever, we are probably going to be included first in the S&P Mid-Cap 400 before we get a chance to get into the S&P 500. I know this has been the discussion, right? For Robinhood, for example, like, oh, why didn't Robinhood get into the S&P 500? At the end of the day, does it really matter? No, it's not a question of if, it's just a question of when. And in the meantime, all you have to do and all you have to know is that the business continues to do well. Right? If they continue to execute, I'm talking here about Robinhood and also SoFi, and maybe some other companies that you want to be included in the S&P or that are eligible to enter the S&P. As long as the business continues to execute, right? As long as we see, especially for SoFi, for example, as long as we get this record adjusted net revenue, record adjusted EBITDA, fee-based revenue, member growth, all of that record, quarter after quarter, year after year, that's the most important part for us. Right? For long-term investors, that's the most important part, because eventually we know if that continues, we will eventually be included in the top 500. And of course, that's the same with Robinhood, right? Who cares if Robinhood gets included now, 2 months ago, or in 3 months, 6 months, a year from now? It's not a question of if, it's just a question of when. And in the meantime, this company will continue to execute. And by the way, I finally got my stock tokens for OpenAI and SpaceX on my Robinhood app. You might say, oh, who cares? That's nothing special. Well, I am in Europe. I'm not in the United States. So me as a European getting something cool before you do is definitely a big deal. Now, of course, as I said, it's a stock token, right? So you might say, oh, but you don't actually own it. Yeah, okay. But apparently, SpaceX is now worth closer to $400 billion, which is up from the previous valuation. So I guess my €5 in stock token in SpaceX are going to be worth a little bit more. Speaking of investing in private companies, so this was the announcement from SoFi today. SoFi expands access to private markets with funds from Kashmir, Fundrise, and Liberty Street Advisors. We, of course, showed you this already during the live stream, but if you aren't able to join us during the live stream, that's fine as well. Me and Jose are live usually at 8 a.m. Eastern until the market opens each and every day. So, SoFi has expanded access to alternative investment to include new private market funds from asset management firms, including Kashmir, Fundrise, and Liberty Street Advisors. Through these funds, investors can gain exposure to multiple private companies across AI, machine learning, space technology, consumer products, healthcare, e-commerce, and financial technologies like OpenAI, SpaceX, Graza, Epic Games, and more. I believe you also have exposure to Anthropic, Databricks, and I think I saw Anduril as well. Now here, again, you get exposure, of course, to funds that have exposure to these companies. So yes, of course, this gets you a step closer to actually being able to invest in private companies before they become public. This is not a stock token or anything. This is purely you getting exposure from these funds to these companies. So Kashmir, for example, let me zoom in a little bit. They invest in a portfolio of high growth companies to give people access to early and growth stage private companies. They are backed by cultural tastemakers like Josh Allen, Jason Tatum, NFL and NBA here. Yes, me as a European, I know this. I know, surprising, right? I do think I deserve a thumbs up for that. Iconic founders and top tier VCs. They leverage their platforms and visibility as a distinct competitive advantage to drive market momentum and accelerate growth. As for Fundrise, you might have heard of this company before. That's the largest direct-to-consumer alternative asset manager in the United States, serving over 2 million people. Fundrise is known for pioneering the democratization of real estate and venture capital through its online direct-to-investor platform. And the last one here, Liberty Street Advisors, is an investment advisor that partners with experienced managers to offer differentiated investment strategies and opportunities in areas like private markets and alternative assets to help investors diversify beyond public stocks and bonds. Now, again, this is good to know, right? This is a good announcement because I've been hearing for a lot of people, oh, Anthony Noto is not a serious CEO. Anthony Noto does not come on my podcast. Anthony Noto doesn't pump up the stock. Anthony Noto doesn't launch new products. He doesn't market SoFi well, etc., etc. Look at Robinhood. Look at the other companies. SoFi is not a tech company because they don't have product events. Yeah, we've talked about that before, right? It was very, very funny. It's very funny now that the stock has more than doubled, of course, since the April lows as well. But we know, right, the actual long-term SoFi shareholders, we know that Anthony Noto is exactly the CEO that SoFi needs and SoFi will need for the future. SoFi is doing what it should be doing. Yes, okay, it might not be as big of a marketing machine like Robinhood, for example, right? Because Robinhood, when it comes out with a new product, we have events, whether it's in the French Riviera or the upcoming one in Las Vegas. No, SoFi doesn't think that is necessary to always have marketing events, or whatever you want to call it, product events. That's for you. But I think this is more of a product marketing type of event, right? You release something, you make an event, fancy schmancy, everybody talks about it on social media. So it's a sort of marketing. SoFi does not think this is necessary at the moment. And I mean, would you blame them? No. I mean, they have a whole stadium named after them, so I guess that's marketing enough. And of course, this is not me dunking on Robinhood. I've actually been quite positive on Robinhood since $8-10 when nobody wanted to hear about Robinhood because guess what? It wasn't cool back then. But it definitely is cool right now at over $90 or so, right? Because it's gone up, huge performance, CEO is coming on YouTube channels, CEO is having great conversation on social media, and so now it is cool. It wasn't that cool when the stock was right around here for a while, of course. But what was the most important here? The most important was that fundamentally Robinhood became a better company. Okay, assets under management went up, transaction-based revenue, whether it's from options, equities, crypto, you name it, all of those things went up and to the right. And that's why the stock has gone up so much. Of course, does it help that you have a big retail community? 100%. 100%. Does it help that you suddenly have a lot of momentum? For sure, right? For sure. That's why you see this increase so fast. But fundamentally, the business has become better, and that's the most important part. We've said this so many times with regards to SoFi. When SoFi was trading at around $10 for God knows how long, right? I've said it time and time again, you can check the videos. SoFi is not a broken company, it's a broken stock. The most important part here is as long as the business goes up and to the right. This is, by the way, analyst expectations still way too low in my opinion. But as long as we see this, right? As long as we see member growth, as long, this is again Robinhood, but you can clearly see when we've seen the business become a little bit better, especially with average revenue per user. But as long as for SoFi here again, we go up and to the right. Yes, it's true that the technology platform has been slower than expected, but don't forget that in 2026, we're getting a lot more deals that will be recognized in the revenue, deals that you have not seen this year, which means you should be expecting those blue bars to grow in 2026. But the rest here, lending revenue up and to the right, financial services up and to the right and actually accelerating. So yeah, this is the most important part. Seeing the business fundamentally becoming better and better. That's what you should be expecting from the business, and the stock will eventually follow. Yes, I'm mixing here Robinhood and SoFi because I do think that's important to understand both of those businesses. You understand why Robinhood has gone up so much so fast. I mean, look at total assets under custody. Huge increase. Okay? You have to understand all of it. It's great that we're near $20. And of course, you will see people say, oh, we will go to $70. We will go to $50 this year. Let's all calm down a little bit. Okay? Let's calm down. Let's be realistic. Because despite the scooter song, the chase is better than the catch, I do think that the catch is better than the chase when it comes to investing. Okay? Like I said, this is still a very good business that is performing very well and is expected to perform very well for the next couple of years. But as you can see, the stock has gone up, of course, quite a lot since the lows in April. But even over the past couple of weeks, over the past 2 weeks or so, this stock has gone up quite significantly, right? It has gone up 32% in a matter of what, 10 days? 2 weeks or so. You might think this is not a lot, but I do think that, and especially right now on the daily here, we are overbought. And so great company, just don't chase, especially not when we are here at a 3-year high. And so all in all, to conclude, great win for us long-term SoFi shareholders, especially those that have been buying sub $10, sub $8 that always had to, well, justify themselves buying the stock, right? To always say, oh, this is just a bank, blah, blah, blah. You should have bought something else. No, we can have a small celebration right now, but just remember, we are still early. This thing can still go up quite significantly because the business is still going up and to the right. And that's the most important part right now. So all in all, congrats to all of us bulls, but hey, I'm still bullish, not selling any single share of SoFi right now. If you enjoy this type of videos, hit all the buttons, especially the subscribe one, and I'll see you all in the next one. Bye-bye.